Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Presently, the Australian dollar wavers above the key support level seen at 65.30 as traders brace for the major economic events this week, which includes the Australian inflation figures, the US Federal Reserve interest rate decision, and the US July job report, which is the non-farm payrolls. The US Federal Reserve is expected to keep rates steady this week, but may signal potential cuts in September, unless there's a surprise on Wednesday and we get a 25 base point cut as inflation nears the 2% Fed's target. Traders will closely watch Fed Chairman Jerome Powell's press conference 30 minutes after the announcement during the question and answer session. Recent inflation in the US showed the Fed's preferred personal consumption expenditures price index rose by 2.5% in June, down from 2.6 in May after peaking at a 7.1% year over year in 2022. Since July 2023, the US Central Bank has maintained borrowing costs at a 23-year high of 5.25 to 5.5. So besides all that, still keep an eye out for this week's Australian inflation figures. Turning to the technicals, if the level breaks at 65.30, then this could see stops down towards the region of 64.75 and reassess from there. Given this week's high trading risk, traders should exercise caution, closely monitoring technical signals and adjust their risk management strategies accordingly. The euro-dollar starts the week on the back foot and declines, while the US dollar index, which measures the greenback strength against a basket of 6 major currencies, edges higher to 104.55. As I mentioned, the US Federal Reserve interest rate and the July jobs report will be the main events this week, so do keep an eye out because they will impact the market. With the euro taking a wrong turn, the market now looks towards the support level of 107.6570 and reassess from there, as we could see a bounce. I'm not getting too negative, even though the market is weighing on the support, as an unexpected bounce could see demand increase rapidly and see a rise back up towards 109 to 110 as the broader target. Dollar yen is attempting to recover, even though the recent bullish Japanese candlestick hammer has not been confirmed, and we do need to see a break above 154.55 to trigger the rally onto 155 to 156. With the technicals weighing, the market may struggle at this level of 154.55 and therefore could see another downturn and negate this bullish candlestick and look to its preferred target somewhere around 150.5 to 151. With two central banks impacting the British pound this week, the Bank of England and the US Federal Reserve will be closely watched. And given the fact that the market is a bit whipsawed at the moment for sterling, we could see another down test, and that is towards 128.10 or maybe lower towards the region of 127.45, where I feel demand may return and see a bounce, and that is on towards the region of 129.60-65 or on to 130 2025, and with the broader call still seen around 131 figure 50. Having displayed initial strength, the bullish spot gold traders struggled to take the level through 2,400 and instead displayed a modest pullback. Although the technicals are a little bit to the weaker side, I feel where this trend line holds somewhere around the region of 2,350 to 58 could see a bounce and eventually take out the level of 2,400 and rally on to 2,420 or maybe even on to 2,430 to 36 and reassess. Wrapping up with oil, the market still remains somewhat heavy, even though there is bullish divergence that could kick in anytime soon. Towards the level of 73.7085 may see the bounce, or closer to 74.65. Nevertheless, keep an eye on this divergence and therefore could see the market recover back towards $78 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest report. I hope you enjoyed the great start to the day.